Perfect. Hi, everybody. I'm Tanya Schweitzer. As Dave alluded during the sermon, the statement of purpose was sort of what bound this task force together. So the piece of it that we realized there was a gap related to ministering to others using our spiritual gifts and financial resources, creatively, ethically, and mindfully, right? That's from the statement of purpose that the community adopted from last year. Nope. So the Reimagining Philanthropy Task Force that was brought together after Gene Kunis's bequest came to us had recommended that the Leadership Council appoint a panel to sort of look at this gap and figure out what about our investment guidelines might need updating and how we could look to develop a framework in the form of a 5-year plan that sort of seeks to get us from where we were toward investment approaches that are going to be using the modern responsible investment opportunities and vehicles that are currently in the landscape so that we can better start to align our mission, our ministry, and our money. So the appointed team that I was helping to head up included Christine Brown, Dave Conrad, Jade Holmgren, Ted Odell, Bob Kent, Dave Shaw, Mike Spinella, and Karen Whitehouse. So what we looked at to get started was what other organizations, other communities of faith are currently doing to sort of align their investment principles and their mission goals. So we did a lot of research. This task force was in place for over a year. We were looking at whether financial management companies, we have a partnership currently with PNC as an external financial advisor for the church's investments. So we were looking at what opportunities do they have, what are some of their competitors doing, what are some of the smaller boutique type places offering, and just sort of what opportunities are out there that might be relevant for an institution with an endowment of our size. We interviewed several of these teams, professionals. We talked to our larger Union Congregational Church, UCC team and pension board about what they were doing. So we did a ton of information gathering, just got as much information as we could about what was happening. And then came the process of discernment. As we started to get comfortable with the language, which we'll get into in a few minutes, and what these opportunities were, we had to really start to wrestle with not only what our mission is, but what does that mean, right? With what have we been doing and how might we be doing it better? How do our core values intersect with investment opportunities? And how could we get congregation-wide understanding over time about some of the steps that might seem appropriate for us and discern those things sort of on a more community level? So what we did was we wrote up the goals and the 5-year plan that were part of our mandate. We also updated the investment guidelines that the church already has. We have an investment advisory committee that supports the treasurer in working with external advisors and thinking through and managing the day-to-day logistics of how we invest our money and what decisions need to be made to make sure that we're maintaining all of our fiduciary responsibilities. So that team is guided by a document, an investment guidelines document that really needed strengthening. And we found opportunities to weave in some of these values into those directives. So that's what I was just mentioning, the Investment Advisory Committee. The Leadership Council has been kept up to speed about every 6 months. We sort of brought these findings and emerging understandings to them to make sure that we were all on track heading in the same direction. So what is responsible investing? It has many meanings, but it's generally understood to be an umbrella term that describes any effort to align an individual or a group's investment strategies with their values. This has become still an evolving landscape, but it's become very, very mainstream. If you're a New York Times reader, you know that there's not a week that goes by that doesn't talk about new ways that this is becoming more of a mainstream process. So most financial management companies are developing or have already developed different approaches that meet investors' demands for this. And there's also a lot of competition emerging in this marketplace. Nope. So one of the phrases that you might have heard tossed around that's related to these strategies are ESG practices, ESG principles, ESG data. That stands for environmental, social, and governance data. And what happens is that investors can use benchmarks related to these things and data that's around these practices to help guide what might seem appropriate for their mission, to narrow down things that they want to exclude or things that they want to particularly pursue in terms of where they're putting their investments. When you decide to direct them in a specific way, it's called a thematic focus or a positive tilt. That's when you are saying, okay, I would like to spend, direct X percent or a dollar amount of my investment portfolio toward a specific type of investment. Renewable energy, affordable housing are types of examples that seem particularly relevant to us at Union. So because this has data, and there are more factors to consider, it is typically the case that managers for these types of products cost more. However, unlike in the past, portfolios that have these types of strategies and these types of frameworks guiding them often perform competitively, at least as well or better than traditional portfolios that didn't have any type of parameters at all. They were just trying to pursue whatever was going to have the highest returns. So this visual is looking at a stock market index that profiles 400 companies that had high ESG, environmental, social, and governance ratings, and excludes companies that products might have negative social or environmental impacts. That's the MSCI KLD Social 400 Index. And you see that here in comparison since 1990 with the generally used benchmark, the S&P 500. So you could see that they kind of went along together. This isn't to say that investment isn't going to involve risk. It always involves risk. It's just to give you a sort of a visual point of reference for the fact that there's no reason to assume that because you're putting factors into place that things are going to perform less well. That's actually not what the data shows. Data points for the last 2 years are not represented on here, but the same trend has continued. To shed a bit of light on the context during this time frame, one of the big factors impacting comparative performance, especially for the past 5 or so years, has been that Microsoft, Facebook, Netflix, and other high-tech companies have been core holdings in ESG criteria portfolios. They have consistently outperformed manufacturing, utilities, and oil company holdings that are very commonly the sort of core holdings in a traditional portfolio. So based on everything that we found and what we learned, these are some of the recommendations. There are 4 total, so we'll lay out 3 here. The first, and this is to direct our decisions for the next 5 years. Between this year and 2024, the goal that the task force recommended was that we start to transition toward 100% of our investments being guided by responsible investing principles or ESG data. By 2024, we'd like to place Union's assets with a financial management firm, or maybe more than one, it might need to be firms, that specialize in mission-driven investing, but we're going to continue to monitor performance and seek efficiencies in management fees. The third recommendation was that we engage in the iterative fine-tuning of our investment guidelines. So this is not going to be a rush that we're rushing out to do this tomorrow. The idea is that we sort of take gradual steps that seem appropriate and logical with community conversation, and with the goal of getting a reduction in investments that feel really clearly inconsistent with our statement of purpose, and emphasizing some of the positive thematic factors that are important to us: alternative energy, energy conservation, education, financial inclusion, affordable housing, sustainable land use. These are all specific directions that there are starting to be a lot more opportunities to pursue. So the Leadership Council was enthusiastic about these recommendations, and the Investment Advisory Committee has also agreed that they're going to commit themselves to working toward this 5-year plan. There's one other one. I said we had 4 goals. There's one other type of opportunity in the space. It's called direct impact investment. It's sometimes also called PRI, program-related investment. And what this is a responsible investment strategy that's in the private market. It accepts lower than market returns because there's a very tangible outcome associated with the endeavor. This certainly makes sense for a church, right? It sounds fabulous, but it's a really different type of investment. It's not something that we've ever done before. It tends to be sort of a pooled fund approach, and it can be illiquid. It offers lower returns, as I mentioned, and it requires a longer time frame. So that's not to say that this isn't something we want to pursue. It was just very clear that this is a completely different process of discernment, and it's a different direction, so it would really require a lot more congregational feedback than some of the easier, smaller steps that the other recommendations outline. So the fourth goal was that instead of deciding right now what should happen with that over the next 5 years, is that another task force is going to be needed to really pursue this as a totally separate, complementary process of discernment and do some research and get findings and bring that back to the community so we can start to have conversations about whether this might be an appropriate thing to do in the future. The Leadership Council has done that. Nick Prilla has agreed to chair this team, and it's going to include several members of the team that were already on the task force that I'm reporting on today, so that we have continuity. Jade has agreed to be on, Karen, Bob Kent, Ted, Mike Spinella, and myself. We've already got it started. So today we're going to do a second hour. It's going to be in the chapel. And after everybody gets a drink, and hopefully a lot of you can stay and come over there. I'm sure that you have a lot of questions. Hopefully I've caught your attention. A lot of these ideas are relevant to how you deal with your personal investments as well, so we'll try to make some of those connections and continue developing shared language and talking about each of these approaches, and also some of the first steps that the Investment Advisory Committee is putting into place or considering putting into place along all of these paths, and definitely to answer questions, right? We also want to get a sense of whether the community, whether this is making sense and whether this feels like it's being handled and communicated in a way that's comfortable, and what ideas and feedback people have. So in addition to the community hour that we're having today, there are going to be 2 evening sessions. They're both going to be at 7 p.m., and they're also going to be in the chapel. There's one coming up on Thursday, and there's one next week, Tuesday. So if you're not able to stay this afternoon and you want to come to one of those evening events, please do. The more robust the conversation is, the better the feedback loop. So that will be great. Thank you.